All right. Good evening, and welcome to the recap of today, the 14th of March. So I went over this trade um quickly before we kind of dive into everything else. Quickly want to run over it again. Why I didn't take it? So why I didn't take it? As I had this 50-minute fair value gap drawn on wrong. Thought we didn't tap in. Also, I didn't know where to choose like this 1 hour demand from, or whether I use a 15-minute demand or the 1 hour demand zone. So demand PY, whatever you want to call it. It's just I now use demand as like the buy or sell to buy move. So the sell move to the buy move. The sell move is then my area of demand. And the PY uses the blocks, which is marked over here. So below that fair value gap is my PY. So I'm using both. Um, Also using slightly higher time frames now. It's good. Still learning. It's a new concept. Learning. It's good, I think. For me, it is. Also in line with only trading in London. I definitely think it's worth it. So why did I take this trade? Why was I looking at this trade? Well, with this bullish structure, came into the 50% of the new weekly open gap. Another concept, which is from ICT. Actually, I don't know how to use that. It's funny, but I was like, all right, we filled 50% of the new weekly open gap, so let's just use that as all right, liquidity grab and then bullish break, so we can look as this as a bullish structure. Trade from that into sorry, into the range liquidity taken. We have our early buys over here, so if we go lower, early buys over here that takes out these highs internally, then builds up 1, 2, 3 highs over here. 5-minute liquidity sweep in for followed by a 5-minute break structure, and then we enter from the area over here and we go long. Why I have this reduce over here is because um I was waiting for low price, so even if I would take this trade, I would still say like, all right, we can come down lower. So after this 1 minute break structure, I want to reduce my risk. So yeah. All right. Actually, you guys gotta wait again because I thought I journaled it, but I didn't. See? Oh, lazy motherfucker. Why didn't I do that? Hold up, I really have to do that. Where's my watermark? There you go. That's really important. So this is actually my entry time frame with all the markings and everything. Yeah, a little bit more like that's just so anyway. Put some screenshot. I'll take like 5 seconds. Then 15 minutes. See where we are. Screenshot. 1 hour. Just take. I always do this. Take every time frame almost. Because I want to see like when I look back, I want to see like, all right. So after we tapped into for value gap, we see these 1 hour wicks. So that's interesting. That already indicates to me like, all right, we might turn bullish. So yeah, always take a screenshot of every time frame. So we're still in this bearish range overall, and we're now coming quite close to that 50%. But one thing I gotta say, like everyone wanted to see Euro come below here, and because everyone wanted to see that, like it's a market sentiment we use with crypto, right? Where we say, what the fuck? Why am I always yawning? Well, basically, where we say, right, that everyone wants prices, see price come lower, and then price doesn't come lower, and then price pushes up, and then everyone is like, oh, we're going to the moon, and then price actually tanks to the ground. So that might be the case right now. Now there's like bad news coming out for the US dollar. with the banks and everything and the inflation rates and what it actually takes to get back to 2% inflation, right? Or interest rate. I'm not sure. I think inflation. So that might be it might be too difficult for the dollar, and we might see a lot of dollar weakness and actually hold this range might hold bullish, and we might not see sell opportunities from here. But anyway, 4 hour screenshot. And then the daily. What is it? Oh, bro, what do I do? We don't need this on the daily. Oh, Claude. I think I'm just literally doing one line. Yeah, that wasn't very effective. Anyway, I can read the candles like this. Yeah, no, I want to have it clean. There you go. Now it's clean. It's clean. Yeah, perfect. TP1. All right, all right, all right. Let's remove that one as well. Now it's clean. You can see the range. Marked on. You can actually now take it a bit to the right. You can see what's on the left as well. So the story is more complete. And then we're gonna do a top down. All right, screenshots are there. Now only need to do the entry time and exit time. So I have a separate journal for trades I missed. Actually, a test, I call this test because I was not quite sure to take it, and I'm still working on this new strategy. So this one gets hit. Entry is at 837. 837. And first TP is 1033. That's quite a long time in a trade. And that's a RR of 4.29. It was 14.323 Monday. Now it's on a Tuesday. London euro dollar buy 429. And then sorry, this takes so long, but I have to do this. And the daily is exactly over here. Perfect. Look at that. Equals 9.01. It's a structure entry. So total risk to reward would be a 5.2% on this trade. Beautiful. Now let's take that off. You can watch the entire breakdown in the case study. I literally just broke it down, but there you go. Remove all this. So actually, this is interesting. We can keep that. We can keep that. We can remove that. And we can move that because we can see that here. We can keep this. We can remove this. We can remove this. Move this. Actually, we'll use that for that swing. Can remove this and give me 1 second. All right. So now we got everything out of the way. I could have like I can redo this entire recap, but I don't want to keep it raw, keep it flawless, or keep the flaws. Nothing is perfect. There you go. So, so let's break it down from the daily, right? We know where we are. It's been a while. Actually, let's get my notes. We know what we All right. So structure plus ranges, my first point. Structure wise, where are we on the high time frame? So we got a high, a low, a lower high, a lower low, a lower high, and then we broke that lower high from here. So we got a bullish break. Then we took out this internal range liquidity. We come into this daily supply zone or weekly order block. See, that's most times it's the same like that. Those those high time frame blocks are lower time frame demand zones or supply zones. Took internal range liquidity. After doing that, we impulse down. We can see we have a volume imbalance imbalance over here where we tapped into. Continued down, and we still have this bullish structure going on over here. Got some disruption of lows over here, then took out the highs before. So disruption of lows, impulse to the upside, bullish break. So we get a high, a low, high, high, low, high, 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 low, last leg to the upside. We got the lows to the downside. Why do we want to target these lows? Because of this liquidity being taken, and we got liquidity here to be targeted. So same over here. You got some demand zones over here, or POIs, if you want to call it, for value gaps as well. Might even say we have some support area over here. So looking into that price to come lower, come into that area. What can we see from the candles daily wise? So we get that slowdown over here, some liquidity grabs now, then volume start to pick up at the end of February. Let's actually look at it from here. There you go. So what can we see? We can see we took out this wick, close below, large wick, and then retraced more than like 70% of the entire candle. So that indicates to us, all right, we're gonna turn around. Look at this. This is a Tuesday, turns around, and we push down. Then another Tuesday, so Monday sets the tone for that week. Tuesday follows up, and we continue down. Thursday, Friday, then we got a Monday. Monday sets the tone, takes out this low, pushes up. Tuesday continues. Wednesday, Thursday, Friday, and then Monday. And I thought Tuesday would set the tone for the week, but that short over here. Look at how strong that candle is. But then, or it set the tone for that week because we knew it just took out a Asia high and previous daily high over here. I caught that short and basically smashed down, took up previous monthly high lows. Oh, of course, it's not, and it's visible here, but you can see previous monthly lows being taken out and previous weekly low as well. And then after we took them, we can see how our weekly close again retraced more than 50% of that candle. On the daily, we can see that as soon as we took that, we got the indecisive doji candle followed by a bullish candle that takes out this wick. And then on Friday, we took out the previous weekly highs, but we retraced quite some distance as well. So that's where my forecast came from, that we might come lower and then go higher again. That didn't happen. With the dollar weakness and the news over the weekend, we came up instantly, took up previous weekly highs, previous daily highs, then took out this internal range liquidity, and we tapped into a 1 hour POI that's set above there. Oh, no, that was over here. That's the Monday short I caught. Again, so caught a short here, caught a short here. And then this is the long. So we basically came in today, took out these highs Monday, came into our potential demand area, but more importantly, we came into the discount of this bullish range that took out this liquidity and tapped into the 50% of that new weekly open gap, and then it went bullish, and then this is our discount where we look for longs. All right, so that's like what happened before. Bias. What's my bias? Well, I think price can come up higher because the news and everything. I actually gonna write that down. Where's my? Oh, I can't open that. Okay, here. Agenda. Read news articles. All right, so I'm gonna do that tomorrow or maybe tonight, and don't watch after. Hold up. It's the wrong one. Shit. Give me 1 second. So we talked about the candles, we talked about liquidity, what liquidity we took, what liquidity we can target on the high time frame. We talked about the structures, fake price range as well, lining that up with liquidity is, of course, we know that we get these lows, they might be taken out. This might be a fake break. Oh, why? This might be a fake break, and then continuation up. Price behavior wise, impulse, but then we got the impulse down, but then we got the slowdown as we arrived at this POI. And now we're gonna dive into today and see what happened today. So we got some trend line below here. So we might take that out after we react from here. So recent file was looking for that as for longs. Of course, I said we have this discount, but this discount came from taking out the liquidity over here. We still have previous daily lows over here. Previous daily highs are taken. I want to see if that looks better on FXCM. Probably does. Yeah, it does. Well, still gonna, or Forex to come, still gonna use FXCM. Then line it up with the DXY. We still got equals down here, so we might see price come lower into this daily, or even taking out these lows. Although this looks like a pretty solid demand area like that. But I want to use the order block. The POI P. And for turnarounds over there. All right. So with the idea of DXY still being able to come lower, whether it's like this, whether it's like this, or just instantly, I favor DXY coming lower. DXY coming lower means euro coming higher. Where can euro go? Well, as we said, we have the discount over here, or the premium over here. Got some areas we can trade from. We actually got this entire empty area above this high where you can trade from. So yeah, that's still valid. So we got the discount, take internal range liquidity. Let's just jump lower instantly and let's go over price for today. So as I said, with DXY can still come lower. I said alerts to the downside. You can see euro coming higher. So maybe that long I shared in the case study can actually be hold until we reach the alert on DXY. Where's the alert? I think the alert is all the way. Where did I put the alert? Oh, over there. Why alert over there? So I think we might take this out and then continue up. That will be a big drop, but it would line up with euro. Euro has this demand zone as well on the high time frame, as you can see from here up to here. So yeah, And it's Tuesday, it's London. It was London, so that's a good swing. So many reasons. There's a lot to talk about. One thing I instantly noticed is that I take out these lows over here. That's into this fair value gap. Broke bullish over here. Um, is there a demand zone? I'm not sure. No, I guess not. So then we use the 5 minute fair value gap. That's all mitigated. So, ooh, saw that news getting low. That's why you should always put your stop losses and everything either based on 2 feeds or based on MT4. So I like to do it based on MT4. So, oh, I have to do London stuff. Shit. Hold up. London tracking. I have to do it after this before I watch Avatar. Maybe the 1 minute can tell me more. So we first pushed up. I don't know. But essentially, we broke these lows as well, and then we turn around and we can see that we have a long from here. And now I actually want to use this chart. It's the same breath. So we get a long, potential long from here. I don't know how many pips that is still. So 35, 45. So there's no entry over here. So we discussed that. So today, what do we have below here? In the discount, we have a demand zone on the 1 hour that looks like this. Oops. Just to zoom in. I'm playing around. Holy shit. Focus up. All right, focus up. So we got this 1 hour demand zone. We tap into that and we actually just tap into the 50-minute fair value gap. I missed that. That's why I was not looking for long. Or I was looking for the long, but was waiting for that for a deeper pricing. Internal range liquidity, we can see on the lower time frames, we have bearish structure. So we have bear structure going on over here. High, low, lower highs, lower lows, bear structure. Then these highs are taken out. Bullish break, pretty impulsive. Taking out Asia low. So this is actually our first buyer inducement, meaning that this is our real Asia low. Asia low but then being taken. Got some more buyers over here. Why? This is like a high time frame support area. Sorry. So at the early buyers, we can see that it's a high time support area. So that's not coincidental, but because we got these highs over here, these highs over here, some over here. So if you just pull that across like this, you can actually see where these moves come from around that area. So same here, rejections, big move. So if we then go lower again, here you can see it. Let me change the color. It's more visible, better visible. So people trying to buy here, using buyers, retail buyers into the market, then we take that out. Easy. 1 minute chart. Damn. I don't look at much at the 1 minute chart anymore. All right, so then it's trade, and what can we see during London? So Frankfurt open over here. Push down, did it push up, take that, bullish break. quite a slow push to the upside. Another reason why I was not sure to take the trade. On a 5 minute, it looked clean, so it was a valid long. Taking out some of the liquidity, essentially coming below this wick over here. You can see it's a 3-pin low the. So yeah, this is even a better 3-pin. Yeah, and if you go to the 5 minute, we can see that there's an order block. So essentially, you could take the longs from below this area, or you could take longs from the 50% of the buy, sell the buy move. Then we build up liquidity to the upside here. 1, 2, 3. And we know that around this area, around this time, we get the swing being formed for our London session and potential swing move for the day. So London sets the direction for the day. Our tone TOTD, yeah, TFTD. Then we got our TP for the trade. You can see the price comes in with this supply zone. This is our 1 minute supply zone. We come into that. Just the higher time supply zone, but 1 minute supply zone, come into that. Using more sellers into the market, especially by this bearish break, but this is after session. And then we get the long continuation and people get taken out short. It's a nice trade over here as well. So knowing that this is like our demand or supply, we tap into that 50%. And we can look for a 1 minute confirmation. So 1 minute confirmation, what can we see? We get our early sellers over here. Just about, I think. We got a bearish break, small one. Here. Followed by bullish break, and then very intricate though. You can see we take out this liquidity and we get the bearish break. And this one, and then you take the 50% of your demand or supply zone. I don't know if there's even room for more pips. So 23.13. Entry over there. Stop above the high. 3.5. And it gives you 1 to 3. So that's a decent trade, right? Take partials off there and you're done. All right, so that's London. Also for this trade, by the way, this long, sorry. After that long, we can see we get a confirmation trade or continuation trade. So if we draw on the structure like we used to, the structure, you can see we reach discount, new structure. We get a confirmation trade there? I don't think so. Kinda not. But we essentially see this low being taken out. So we got our demand zone. And let me put that a color so it's more visible. So we got this bullish range. Let's move this one. Let's make this one more visible. What? Oh. Remove the session. All right, so bullish break again. And we can also say like this is a bullish break maybe. So both ways, both work. You can see we reached discount as well. So, but let's just keep this one. Then we have the continuation trade. So we got all the confluences over here. Early buyers, uh, bearish break, bullish break, entry, long moves away. So we can just look for the continuation trade, whether you take it from this PY over here, which is super valid, or you take it from the 50%, which I would do now. So long 36, 46, stops below the low, 6.0, and then target these highs. That's your first TP, 1 to 3.5. Beautiful. So that will be the continuation trade. That's London. I love London is so clean for me to break down. So now the hard part, that's New York. So we go on the back of London, we create a new bullish range. What can we do? Can we remove this? Yes, we can. Why? Because we broke above here, so we're not interested in this. Actually, let's keep it on. I might want to use it for later because I still have to watch the video. I don't think I have time to watch Avatar today. Well, watch video. Right. But essentially, we have this liquidity over here that started it, and then we take up previous daily highs. And by doing so, we break bullish. Over here. So actually, this equals what TP gets hit. Doesn't matter if it's this. Actually, it does matter if it's this one. And I think it's this one, but it was so slight, and it's still so slight that I'm not really interested in it. For high time frame, where can we need to trade from? So that would be our last area. We got a 15-minute PY sitting over here. We got a sell the buy move over here, like this. So yeah, then this would be our supply zone or demand zone. Sorry, 15 minute D. And yeah, that's for tonight, probably tomorrow, maybe. Also got a 15-minute PY over here. Go lower, what can we see? Not the cleanest though. So we just go for a PY 15-minute POI. So that's our extreme. This is our decisional broken off here. So we could say like this is our structure. And that's only if we count this as a break. So we're a bit in a messy scenario right now, messy price action. Yeah, it's a bit, yeah, nah. This was the other range. See, that's taken out. Then we get actually mark on 2 arrows. No, looks like there's more here. Oh, what's with this? So yeah, all right, New York. Then New York, we had new CPI coming out, 6.0 as expected. As forecasted. There's longs here. I think there's shorts. There's nothing for me. I can see straight away there's nothing for me. Maybe a long from here, but this is ugly as fuck. As soon as like oh, actually there's a short here. So we break below here, break above, break below. We got a move over here, 5-minute PY. I prefer 15-minute PY actually. 15-minute PY works as well. All right, we take that 15-minute PY. Essentially, we got a 1-minute buy sell to buy to sell over here. Or this one, take this one. So 50-minute, tap in. So redefine that. Let's just redefine that. It's way better. There you go. And then we got our early sellers over here. This one, early sellers take out, and then very intricate short here, but a valid one nonetheless. Taking it from that, I don't know. I should use it like this. Is there a 5-minute swing? No, not really. But using this, so 5-minute PY, you sweep this, break bearish, so it's quite valid actually. Then we take out this liquidity over here. Beautiful. Then we take out some more liquidity over here. And we take out this one. It would be my swing, I guess. Or maybe this would be my swing. This would be my swing. Then we get 1 pip breathing room, short. So 91, 81. Taps us in. Stops above the high. 3.2, 3.7. And it gives it, so we would target this low. And then 1 to 5. So it doesn't hit 1 to 5. But it gives a nice 3.7 RR. So that would be like the only possibility for New York, I guess, or a long for this fair value gap if you want to trade like that, but I won't trade like that. So yeah, I find it really hard to discuss New York because I'm trading this, so I know what happens, and if I don't know what happens, there's probably no entry. So, and there was an entry, so I was pretty clear about price action, and then New York is just shit. When London is clean, New York is usually shit, especially with news. But yeah, that happened. Let's clean that up. I don't see anything else. So got that. Now we're bullish. Let's go into sweep. And what can we expect for tomorrow? I see this as a support area. So we tap into the like of this liquidity. So I'm actually interested in what's above this liquidity. So for value gap. All right, we can see a 5-minute PY. So we tap into that. A Y to sell area for the 3-minute. don't use that. You can use this one if it's if I'm on the 5 minute. Meh, meh, meh. Would still use this one. So that one sits over here. 7501. Then go back. 7 5. No, didn't type in yet. Nice. So you might see price come higher tomorrow to tap into that area. Uh, yeah, I'm pretty. What's the news for tomorrow? Just tomorrow? No. More PPI? Oh, retail sales. Nice. That's good. And we have PPI. PPI means product price index produced. Can't remember. Producer price index. The producer price index measures change in the prices paid to U.S. producers of goods and services. The PPI is a measure of wholesale inflation from the perspective of the product manufacturer or certain. Wow, that all right. Whatever you want. What is this? Nice. I didn't even know you put me into history like that. But what did I look into today? The Legend of Korra, guys. This is the shit. I'm telling you. All right. So that's it. That's really it for today. I see longs coming true, although we're building some. Oh, let's actually not. Let's just not say I see longs coming true. What else is there to the downside? So we got these lows. Not really a trend line, but a trend line. We have, if we zoom out and just take this away for a second. I'm gonna clean this up after the recording. I still have to watch something, so you can see price coming into the discount and then look for longs. Although with the liquidity over here, I'm not sure if you want to take longs from there, but it's fill it nonetheless. Uh, 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 uh. So yeah, so we can see price come lower into the discount, or we can see price continue with this smaller structure and then flip from there, and then we can look for sells into this. Let's recap. Catch you guys tomorrow, my last trading day for the week.